So I wanted to introduce our next moderator, Katie K. Richards, CEO of Cyber Capital. I wanted to just open up by saying that what I love most about Katie is that she's curious and she loves to learn and enjoys giving back. And to me, that's extraordinary. But her background is incredibly illustrious. She's, as I mentioned, CEO of Cyber Capital, a trusted pioneer in cryptocurrency investments and fundamental analysis since 2016. Prior to that, she was at Falcon Private Bank, the first Swiss bank to pioneer cryptocurrency investment in 2017, where she was head of digital custody and trading and head process management. Previous roles at global institutions include Salomon Brothers, IBM, Credit Suisse, and UBS, shaping risk management, business strategy, innovation, and research and product. As a professional risk manager and process expert, Katie holds degrees from McGill in Montreal, Cass School in London, and from the University of Cambridge. Katie, I welcome you, and the floor is yours.
Good morning, everybody. Good afternoon and good evening to our global audience of colleagues interested in AI and blockchain. I'm really honored to be here and introduce our outstanding panel of talented specialists, and then I'll lead on with the discussion today on the topic of Beyond FinTech. I'd like to begin our introductions of the panels with Dr. Agata Ferreira. She's a lawyer with a PhD in international investment laws. She's an advisor, scholar, and a university assistant professor. She's based in Spain. She focuses on legal and regulatory issues related to technology, fintech, and in particular blockchain and its developments. Agata has spent several years practicing law in London, financial sector, at Clifford Chance, and at the investment bank of Credit Suisse. She's an assistant professor at the Warsaw University of Technology and a guest professor at several other universities within Europe. Agata is a member of the advisory council at Blockchain for Europe, a member of an expert panel at the EU Blockchain Observatory and Forum, and holds a number of advisory positions in the blockchain industry. Next, I'd like to introduce Emmy Yokeshawa. She's VP of Corporate Strategy and Operations at Ripple, based in the US, and responsible for corporate strategy and business operations, as well as a joint venture partnerships. She's a member of the board for MoneyTap, which is building a next generation payments platform leveraging Ripple's distributed ledger technology. And she's, pardon me. And Emmy is an adjunct professorship at the Kyoto University Graduate School in Advanced Integrated Studies at Humanities Survivability, and drives blockchain research, collaboration between industry and academia. Early in her career, Emmy managed the product development of investment analytics solutions at MSCI, and previously part of Morgan Stanley. Most recently, Emmy was selected as one of San Francisco's business team's 100 most influential women in business in 2021. Emmy holds an MBA from Harvard University and is a chartered financial analyst. Dr. Amber Gadar is one of 3 founders and the chief investment officer of Alliance Block, based in the Utrecht, London, and Zug, Switzerland. With a background in coding, IT, and trading, Amber started her career in global investment research at Goldman Sachs London, then moved to JP Morgan in London in 2012 to work in structured and exotic products across equities, FX rates, credit, and commodities. She then spearheaded macro systematic trading strategies, focusing on fixed income, dynamic risk premia. Amber is one of the masterminds behind participative capitalism and calibrocracy. Sorry, Amber. And she can speak a little bit more about that, as she does also at events such as at Davos, TEDx, UN Women and Money 2020. She's frequently quoted on Bloomberg, Forbes, NASDAQ, and other media, and featured in the Fintech Times 2020 list of women in crypto power. Last but absolutely not least, before we get to Robert, I just want to tie up on Amber. Very special background, like all the rest of our panelists. She's a graduate of McGill and HEC in Paris and holds a BSc in Science and Technology and 3 master's degrees, one in neurosciences, one in microelectronics and nanotechnologies, and thirdly in international business. And to top that off, Amber holds a PhD in molecular medicine and is a guest lecturer at the EDHEC in Nice, which is the School for Higher Business Studies in northern part of France. And now Robin Levin. Robert is the CEO of Emerging Star Digital DeFi Fund, LLC, which has a successful track record in market neutral strategies, investing in DeFi tokens, staking, stable coins, yield farming, and SAFs, which are simple agreements for future tokens. Now that's a lot of jargon, but those are all the new words that are coming up in this wonderful space of blockchain. He trained at Salomon Brothers, now at Citibank, and he was a former macro strategist and trader. Sorry. Trader at Paul Tudor Jones and Louis Bacon, and also for his Wall Street family office. Robert is a digital health expert, a technology pioneer of World Economic Forum, and a best-selling author. He holds an MBA from the NYU Stern School of Business, a master's in international affairs from Fletcher School of Law and Diplomacy, and is a former adjunct assistant professor of finance at the Columbia Business School. So now let's start and dive into our panel this morning on the questions. And I'd just like to do a little bit of a short introduction, set the stage about the power of blockchain. And just to remind everyone that blockchain is a peer-to-peer network that sits on top of the internet and invented in October 2008. And it's going to change the world. I think similar to how the internet focused on the digital exchange of information, blockchains allow for the digital exchange of value. Now, this disruptive technology is really forcing financial service to evolve beyond fintech, which are improvements made on the proprietary and siloed infrastructures that were built before the internet. And the use of cryptography and consensus mechanisms now creates new forms of trust that we haven't seen before. And this allows us, through secure and encrypted peer-to-peer transaction, the use of smart contracts to really change the way that we do things by programming without the need for human intervention once we've launched. Now, blockchain is more than a new tech story. It's created, a continuously evolving digital asset class, with cryptocurrencies being just one use of the innovation. And you'll hear later on today about NFTs and possibly metaverse, which are just 2 other uses. But now we're able to really rethink how we manage, our products, how we can distribute and access financial products with value through features such as interoperability, tokenization, fractionalization, and running 24/7, just like the internet, not Monday to Friday, 9 to 5. So how is this revolution taking shape? Let's now turn to our colleagues and find out a little bit more. So Agata, before you help us understand the key country positioning and the global regulatory aspects of the blockchain, I wonder if you could tell us how you first got into cryptocurrency personally.
Thank you very much, Katie, for this generous introduction. And thank you very much for having me here on this panel. I am very humbled to be surrounded by such prominent speakers. Really, really humbled. So thank you very much. I was, as you said earlier, I was practicing in law in financial sector in London for over a decade, a number of years ago, before blockchain happened. And I have seen the rise and fall of blockchain sector, and I participated in the peak and in the fall of that sector, in the crisis and everything. So I have seen the deficiencies and the shortcomings of this sector, And after that, I was exposed to the technology sector, and I realized that there is a huge gap between law and technology, but also between legal and technical community. Basically, there is these two domains not so long time ago were completely separate, law and technology. And through this technological revolution, these two domains became more intertwined. But the communities, the understanding, this hasn't improved so quickly. So I have seen the gap. I have seen the gap of technological communities using different terminology, different terms. I have seen a consternation of lawyers of how to apply existing legal principles to this new technological space. So this has sparked my curiosity, and here I am for some time now.
Wonderful. And could you tell us a little bit about where you see the opportunity of blockchain technology?
Well, as you have mentioned earlier, and as the title of our panel, Beyond Fintech, what blockchain is something more than the fintech in the traditional meaning of that term, because we are not only, blockchain is not only, there's not only an opportunity to improve what we already have, but there is an opportunity to restructure what we already have, fundamentally restructure. There is a structural shift and a paradigm shift that is happening, which goes to the very infrastructure, to all the established systems and established design that we have been operating in for so many years. So there is a fundamental structural challenge, but there is also an opportunity to address the deficiencies that are currently, that blockchain innovation exposed, for example. So there is an opportunity to harvest this innovation for social progress, for social benefit, to address a lot of the issues that traditional financial space seems to be unable to address, like financial inclusion or cost or some other benefits that blockchain innovation brings. So there is an opportunity here, but we need to take this time and have a space to rethink our current institutional and financial design, and also to understand the broader perspective of this innovation, rather than targeting individual phenomena within this space separate, like stablecoins, for example. We need to take a step back and look broadly on this innovation, and with a long-term vision, because during our panel before us, this is not going anywhere. This space is growing. So we need to understand what is the long-term vision and how we can harvest those opportunities for social progress, for the benefit of us all.
Completely agree. Now, countries are approaching this new technology in a different way. I'm wondering if you, through your eyes, can tell us a little bit about the continuum of countries that are using, blockchain, either private permission, and those who are, for on-chain, using cryptocurrencies. How would you describe the global landscape?
Well, I can tell you about the global landscape of legal and regulatory approaches and policy approaches to this innovation, and it's a piecemeal approach. It's a very fragmented approach at the moment. And whilst not so long time ago, it was still fragmented, but there wasn't much regulatory activity in this space. Right now, what we are observing is increased regulatory scrutiny. As this technology develops, as this innovation becomes more mainstream, and there are some extraordinary occurrences happening, like, for example, announcement of a project like Libra, which has brought this innovation firmly on the regulatory agenda. We are seeing more and more regulatory activity, regulatory curiosity, and regulatory initiatives. And what we are also observing is the full spectrum of how it looks like, from prohibitive stance in some jurisdictions through blanket bans of certain activity, like, for example, in China, ban of cryptocurrencies, of trading cryptocurrencies or ICOs, to a wait and see approach. So a passive approach is still dominant among all jurisdictions, to anything in between, to regulations that are very prescriptive, regulations that are very bespoke, or regulations that are targeting only specific phenomena. So we are seeing a broad spectrum of approaches, and with that, there are also increasing opportunities for regulatory arbitrage, or increasing dangers of regulatory arbitrage. And with this landscape of diverging regulatory approaches comes the difficulty for blockchain innovators, for blockchain companies in this space to navigate that landscape, and an increasing cost of possible compliance. And there are still a lot of questions that are unanswered. There are still a lot of issues that the regulators and lawmakers haven't got to answer yet. So what we can expect is really increased lawmaking and regulatory activity targeting this space going forward. And a lot of that, a lot of regulatory activity is still, I should say, fear-driven, with an intention to capture and control this innovation, and maybe less so to support and harvest this innovation. So many regulators still look through the risk factor. Many of these risks are, of course, still theoretical, because some projects haven't been implemented yet. But it's perhaps a dominating approach right now, still a lot of mistrust towards this innovation, or some parts of it, among the lawmakers and the regulators. So we need to balance mitigation of risk versus supporting this innovation going forward.
Thank you, Agata. I think, you mentioned one thing in just before, harvesting. So I'd like to move on to ask Robert. Robert, you're harvesting, this new technology, and you're doing this in a particular way through your business as a CEO. Before I begin, I think it's also interesting that everyone gets a chance to sort of explain how they got involved in this space. So Robert, before you dive into how you're harvesting this technology, can you tell us, when you got involved with crypto?
Absolutely. First of all, thank you, Katie, and thanks to Radhika for organizing this summit. It's a pleasure to be here. So I got involved with the blockchain in 2015 when I attended a conference in Los Angeles and heard Michael Turpin speak, and had a meeting with him. Michael Turpin is a leading convener and investor in protocol innovation and tokens and blockchain. So he encouraged me to start investing in Bitcoin, and I did not. He showed me some blogs that I should follow every day and how to invest, and I didn't. I regret that. But I started in 2017 to advise ICOs, and then I invested with friends in the family office community in a DeFi SAFT, got them involved to invest in Celsius, 2018, which went up over 3,500% from inception, from token launch. So that's a DeFi lending platform. That's how I got involved.
So as an investor, I mean, what opportunities are you seeing now in the blockchain technology?
So the fintech sector of cryptocurrencies is called DeFi, which stands for decentralized finance. It represents a cohort of over 440 fintech tokens that are worth close to $100 billion, led by Cardano, Circle, Polkadot, Cosmos, Uniswap, and others. And so there's over 20 new unicorns, over $1 billion market cap in fintech DeFi tokens since January 1st. So the number of wallets is growing, the number of developers on these DeFi protocol platforms are expanding rapidly. So I see the opportunity in 4 sectors: asset management in DeFi, payment technology using protocol innovation on blockchains, exchanges, and yield farming. And those are the 4 sectors I think are growing most rapidly in DeFi.
Can you tell us about the service offering of emerging star capital in DeFi that you're managing?
Sure. We're targeting investors in family offices and institutions. We plan to grow our fund to 250 million within 18 months. I have a Wall Street background and working with major hedge funds, and I launched a artificial intelligence speech translation on mobile platforms, became a tech pioneer of the World Economic Forum. So I have both a technology and Wall Street background, which is unique and ideal for investing in DeFi.
You have a team of 5 professionals across Switzerland, New York, Silicon Valley, and Dallas. What do you see are the biggest challenges of your business today?
Well, there's a lot of highly scalable protocols in DeFi that solve problems very fast and scale, but they're very early stage and many are undercapitalized. So we're investing in SAF, Simple Agreement for Future Tokens, for example, Ardana, which is on the Cardano platform. And we expect that we'll be able to make 30 to 500% in these. So the biggest challenge is finding the right deals and conducting due diligence as fast as we can.
Now, but despite those challenges in the tech space, what's your favorite part of the work that you're doing for the business?
Well, it's intellectually challenging because it requires knowledge of studying the technology, the protocols, the white papers describing their protocols and business strategy and how they will compete in this crowded market, which is getting overvalued in certain sectors of DeFi. So I find the whole process exciting because the rate of growth of these protocols is so rapid, and the time to become a unicorn is shortened to 6 to 12 months, at least during this liquidity bubble. So I find that there's a high probability that the bubble will burst in 2 or 3 years, and the ones that will survive, like BlockFi and Gemini, in the public markets and in the token markets, Cosmos and Polkadot and Cardano will survive along with Ethereum and other DeFi platforms. So there's hundreds of DeFi platforms now, and only a small percentage, maybe 5 or 6 or 10% will survive the bursting of a bubble in a few years. So there'll be consolidation, M&A, exits in the public market, exits in the token market, and acquisitions by major financial institutions.
So you've been discussing, the technical future for some of these protocols. What about the adoption side? How long do you think that adoption could take, and what would support that adoption on the user side?
So institutional firms, brokerage firms, are being disrupted by Robinhood, for example. So that process on that side, non-blockchain, will continue to be disrupted through apps and disintermediation. On the fintech side of blockchain, there's all kinds of advantages that will be apparent to the institutional world, including the banking sector, including the asset management sector. So I think there's going to be a lot of acquisitions, but it'll take 5 to 10 years before this fintech sector of DeFi, decentralized finance, becomes mainstream. That'll be highly disruptive, add a lot of value, and eventually digital banks will replace commercial banks. There'll be a merger and a hybrids between brick and mortar and DeFi.
That's wonderful. Thanks very much, Robert, for your insights as an investor. And now I'd like to move on to Amber. Amber, in Alliance Block, you're on the panel representing, an ecosystem approach. I'm wondering if you could tell us a little bit about how you, got into crypto, and then tell us a little bit about Alliance Block.
Sorry, yes. So in the early 2000s, I was quite involved in peer-to-peer file sharing system. One in particular was called GNU-Tella. So GNU-Tella was the first decentralized peer-to-peer file sharing system. And it was running on something called the Gossip Protocol. And it was created as a result of Napster being shut down. For those of you who remember, they had clients like LimeWire and BearShare, where we could download and upload files. One of of the issues we had with the Gnutella and the other peer-to-peer file sharing system was that uploaders, who were people that left their desktop open at night running for downloaders to come and pick up the information, were not incentivized. And so the system or the protocols were not running as solidly as they should. And then move back to 2009, someone sent me the Bitcoin white paper. And when I was reading it, for me, it was obvious that it was gossip protocol on amphetamines. And the beauty of Bitcoin is that they solved the issue that we had in peer-to-peer file sharing system, which is incentivizing the uploaders. And in this case is incentivizing the miners by creating a currency that is called Bitcoin. And I dropped that behind my head, because in 2010 I joined investment banking and just forgot about that. And then moved back to 2018. This is where my co-founder Rashid came to me, and then we started discussing blockchain and the opportunities that blockchain had to disrupt or improve investment banking and capital markets. So this is how things started for me.
And what opportunity are you seeing blockchain technology for Alliance Block?
Well, I think one of the best analogies is to look at how payment systems, particularly or initially PayPal, led to digital banks that have disrupted retail banking. And the way we see it is that part of fintech and emergent tech and blockchain have led to DeFi protocols, and these DeFi protocols are and will disrupt investment banking and wealth management as we know it.
Now, I understand that Alliance Block has 3 distinct service offerings. Can you tell us a little bit about what they are and the problems that they're solving?
So Alliance Block is peculiar in a way that most layer 2 blockchain protocols focus on one problem, one solution, while what we do is, and you can hear it in the name, Alliance Block, is we're building or we're creating the building blocks of what the financial infrastructure should look if it was built from scratch with new technologies like blockchain, machine learning, and AI. And you're correct. So we have 3 main blocks. We have a data layer, we have a regulatory and compliance layer, and then we have an investment terminal. And across all of these blocks, we have a multitude of products going from something called trustless KYC AML to decentralized exchanges to bridges, et cetera.
Now, I'm wondering, you talked about Rashid. What was the original trigger for your idea? I think Alliance Block started out as something a little bit different, didn't it?
Yeah, so Rashid and Matisse, my 2 co-founders, came to me in 2018. So Rashid is one of my best friends. And he came to me in 2018. I was a trader at JP Morgan at the time. And he wanted me actually to be an advisor to the initial project. And that was the time where the ICO hype was at its max. And as you know, there was a lot of scams, a lot of fraud, lack of transparency, etc. And they were looking to build a platform where you could rate the actors, rate the pool, and rate the different projects. And then the more we started talking, like for me, it just ticked. And I was like, but this technology can actually really disrupt what I'm doing at the bank today. And so we started talking and we started building an Alliance Block, like the protocol and the framework of Alliance Block actually derived from the late night talks that we had on the phone at the time.
So you're based in 3 places, I understand, Utrecht, London, and Zug in Switzerland. How many staff are you today when you started with the 3 of you?
So now we've breached the 100. We currently have more than 80 developers and 100 in total staff.
And your focus for your efforts currently are where?
So it's on the investment side of things and on the product development side of things. So I'm a trader by background, and I find the crypto asset class is a fantastic asset class, like a brand new asset class where there's so much risk, but at the same time, so many opportunities. And in terms of product, again, it's like so fast and so creative that people and us have came up with products such as AMM and mutualized insurance and the rest. So there's just a plethora of fantastic products that we don't exist in the in traditional finance, which makes it exhilarating to wake up in the morning and start thinking, what's the new product that you're going to invent to disrupt the status quo?
Now, it's not all roses for sure, by the sounds of things from what you're painting, this excitement. What are some of the biggest challenges that you're facing today?
I think today would be talents. So there's a supply shortage of experienced smart contract developers. So, I mean, yeah, there's just a limited supply for these people who have experience, because this whole business started maybe, let's say, 10 years ago. I would also say one of the challenges that we have in the industry in general is governance. So a lot of the forms of governance are still, in my view, still very, very junior and very, very much incomplete, because they rely on the power of the number of tokens that you own that will give you a value for your vote. So the more tokens you have, the more your vote would count. And this is, between you and I, capitalism at its worth. So we are working on something that is called calibrocracy, which is a trivariate protocol where we look at not only your capital, i.e. the number of tokens that you have in the system, but at the same time at the work that you are giving to the protocol, and at the same time at the knowledge and influence that you have within the protocol. And we come up with a weighted average that would give you this reputation score that would allow you to have a vote that is corresponding to your real value in the ecosystem.
That's all really exciting. And that was that long word that I couldn't quite wrap my teeth around, calibrocracy. So I'm sure we're going to hear a lot more about that in the months and years to come, and on the topic of governance. Now, before I move on to Emmy from Ripple, just a last question, if I may. What's your favorite part of the business?
Oh, that's a complicated one. I would say it's the creative side of things. It's being able to think a product, develop the product, test the product. And it's great because our go-to-market time is very short compared to, traditional finance. You can come up with a product, send it on testnet, have people start using it and giving you live feedback. We like this, we don't like that. And then your product can evolve organically to become the product that your community actually needs and your community actually wants.
Wonderful. Now, Emmy, following that excitement that we've heard from Amber about this space, when did you get into crypto? Maybe you can tell us.
Yeah, sure. Thank you so much, Katie. It's such an honor to be on this panel. And also huge thanks to Radhika as well to inviting me to this conference as well. So for me, so I started my career in the financial engineering space, and the company I was working for was acquired by Morgan Stanley. And when the 2008 financial crisis happened, I was literally working on the Wall Street. And that experience, the whole collapse of financial markets really made me realize the current financial structure has a fundamental problems and it's not really sustainable. So with that realization, I went to business school at Harvard, and I decided to focus on two areas. One is social impact and sustainability, and the second is emerging technologies. So I cross-registered at the engineering school. I explored many different emerging technologies. And somewhere along the way, I encountered Bitcoin and the blockchain, and I was totally fascinated by the concept of the new money, new internet money. But at that time, it was so early, so there was no job market for MBAs in the blockchain space. And then later, after I graduated, I went to Silicon Valley, I worked for tech companies. And then somewhere around 2015 or so, I started to see the emergence of enterprise blockchain. And Ripple was at the forefront of the trend and growth. And in 2016, I decided to join Ripple.
And what opportunity do you see, particularly for Ripple, on using the blockchain technology?
Yeah, so when we can step back a little bit and kind of look at the macro level, I see we are now in the kind of second wave of internet revolution. The first wave of internet revolution was really about democratizing access to data and basically removing frictions from the data exchange. That's what we call the internet of data. Now in the second wave of the internet revolution, it's called the internet of value. And basically we are democratizing access to value and liquidity and removing frictions from the exchange of value. Now this internet of value, the concept is really big. The value could include not just currencies, but also any sorts of assets of value. And Ripple decided to focus on cross-border payments in the massive value and payment space because one, this cross-border payments is a massive market with a $150 trillion market, right? And then second is that it's the area that has the biggest frictions. The average cost of sending cross-border payments is as high as 7%. In some emerging markets, could be as high as 20% or 30%. So we saw a huge opportunity in there, and that's how we decided to, get started.
And tell us a little bit about the core services that Ripple is offering and what problem it's really solving.
Yes, so Ripple offers a real-time settlement network for cross-border payments. It's basically a peer-to-peer network of financial institutions, and they can send real-time messaging around the payments. And also, most importantly, the on-demand liquidity capabilities, which basically utilize digital asset XRP as a bridge currency, a bridge asset between two currencies. And by using that, basically you can eliminate the need for pre-funding. Historically or traditionally, when financial institutions do cross-border payments into another country, they have to set up a Nostra account and pre-fund money there. But that process is very costly and operationally very burdensome. But by using the digital asset, you can completely eliminate the process and you can convert currencies on demand and you can secure access to liquidity as you go.
And the target customers of Ripple, who are they? Who's your focus at the moment?
Yes, so we work with a wide range of financial institutions, including large established financial institutions and also more emerging smaller fintech companies. We are seeing the biggest traction in these smaller fintech companies because they are the one who has been kind of ripped off in the existing financial infrastructure. The current FX market is really dominated by large incumbents like financial institutions. And the access to FX is extremely difficult and also costly. But by tapping into the liquidity of the digital assets, those small guys can also access to a cheaper liquidity.
And what triggered the business idea of Ripple?
Yes, so Ripple was established in 2012, so we are really kind of early entrant. And in the initial few years, we explored so many different use cases, including consumer use case and everything. But ultimately, we realized this concept of internet of value. That's really the foundation of all the problems that exist in the financial infrastructure. So we decided to focus on cross-border payments and also decide to work with financial institutions. That was not necessarily a popular idea at that time because many of the early Bitcoiners, they were more anti-government and anti-incumbents and stuff. But we believe that in order to make a biggest impact in this industry, we have to work with the incumbents and the governments, and so that we can, because the money is there, right? And by enabling them to take advantage of new technology, we thought that we can make the biggest impact.
And your current country reach, where's your focus at the moment? Yeah,
so currently our network covers more than 55 countries and also covers 120 currency pairs. Right now, we are seeing a lot of attractions in Asia, Southeast Asia particularly, and also Middle East as well, and then also India as well, because that's the area that this access to liquidity and FX has been historically very difficult.
Now you're solving a real problem, that payments, and making it cheaper and faster for the users. what do you see are your 3 biggest challenges in the business at the moment?
Yeah, I would say that first, probably the single biggest challenge is really the lack of regulatory clarity in digital assets. And there is no international standard for how to think about the digital assets. Different countries have a different framework. On one hand, Japan, Singapore, UK, they tend to have a more clear framework, whereas in the US, there is an ongoing confusion about how to classify digital assets. And so that has been really a mess. And it's a problem not only for blockchain companies like Ripple, but also for our customers. They're eager to utilize blockchain and digital assets, but just sometimes you become so hesitant because of the lack of regulatory clarity. So that's one thing. And then second, I would say, is just like Radhika mentioned earlier, it's lack of a blockchain mindset. Some of the large financial institutions tend to look at blockchain as more of a cost-cutting tool or something to make a marginal improvements, like Agata mentioned earlier. But it's really important to understand how this technology enables a paradigm shift and how it enables new business models. So yeah, that's kind of changing the mindset is one of the big change. I think compared to several years ago, it's much better now, but then there is still some work to be done. And then lastly, the third one I would say is actually similar to what Amber mentioned, is the lack of engineering talent. Now, like a lot of tech companies are getting into this crypto space, blockchain space. This shortage of engineering talent with blockchain experience is really becoming hard to come by, a lot of competition. But that also means that now is a great opportunity and a chance and timing for engineers to come into this space. So I hope more people are coming into the space.
And I think we will be seeing more and more people coming to the space. I think that's a given, and I totally agree that education is key to unlocking companies and individuals to step into this space. But like with all new technologies, it can be quite daunting. And I would just like to, before we move to the Q&A, because we promised we'd give at least 5 minutes, I'm wondering, let's run around the table and ask each, I'd like to have your remarks to leave to the audience on what you think are going to be the key success in this emerging space. I'm wondering, Agata, what are your thoughts? What would you say are some of the key criteria for success from your point of view?
Well, I think I'm going to tie in with what Emmy was saying earlier, and that key criteria from especially my focus of on regulatory and legal issues is clarity, legal and regulatory clarity to start with, because that will bring many more institutions into the space, that will legitimize many of these projects, and that will provide many more investment opportunities. So for that to happen, there has to be, the regulators around the world have to step up and move on from this reactionary stance that they currently exhibit to a proactive approach, a proactive and friendly approach. So out of the fear, out of sometimes their own zone of expertise and their own zone of comfort, into joining that space with the mindset of long-term vision for what this technology brings, what opportunity it brings. So that is certainly one of the challenges and one of the opportunities at the same time. And also the other one that I want to mention, and that also ties in with what Ripple is doing, which is cross-border payments and basically bridging different jurisdictional and payment zones around the world. We need to do the same on the regulatory side, more harmonization and more common approach, commonly developed principles, commonly developed goals and objectives, regulatory objectives for that space, to avoid this increasing piecemeal approach of divergent approaches and divergent regulatory strategies to the space. And this is probably the biggest challenge, which is going to be testing, but this technology is testing the legal community anyway. But to combine different needs, different levels of development, different expertise, different resources of various regulatory agencies around the world, and to harmonize the common approach, that's going to be probably more difficult, but increasingly more necessary.
And we've sadly run out of time for the Q&A, but Robert, in 2 bullets, what would you leave as your, what is your key criteria for success?
I'm looking for DeFi leaders with management expertise, full compliance with all laws and regulation, and protocol innovation that has proven applications in the institutional finance world, including investment banking, commercial banking, and payments and exchanges. And so I'm very optimistic that the unicorns will grow rapidly and be deca unicorns and 100 unicorns in this DeFi space. Currently, there's over 20 unicorns. So I'm very optimistic that we're going to see adoption more rapidly in the institutional world. It'll take a few years, but it's accelerating. Also, I'd like to ask you 2 questions, Katie, if you have a minute.
Well, I think we're running a little bit short on time for that, but I just want to really wrap up with Amber and Emmy quickly. Amber, what do you see as the key criteria to success for you?
So I would look at both sides of the coin. Usually as an entrepreneur, risk-taking versus risk management, i.e. you should be able to make decisions very quickly. Even if the decision is wrong, you can always fix it later. However, as a blockchain entrepreneur, I would say it's risk management versus risk-taking, because as my esteemed colleagues have said, finance, we're trying to disrupt finance, and finance is one of the most heavily regulated industries in the world. In the US, it's 3 times more regulated than the healthcare industry. So you need to be very, very careful how you're dipping your toes in there. And additionally, you need to be very careful in terms of auditing and in terms of stress testing, which we're not doing enough in this space.
And the last word goes to Emmy.
Yes.
What's the key criteria for success?
Yeah, to me, for the longer term success of the blockchain industry really depends on the diversity of talent in this industry. And there has been a problem around the gender diversity, but it's improving. And I'm so glad that Radhika and Minnie achieved the gender parity in this conference. It's a huge, big step, and I hope this trend will continue.
And so for our audience, as a nice wrap up, as we've heard from Radhika this morning earlier, it's a massive mindset shift, and the speed of change is quickly. My last word is to encourage everyone, it's all new, we're learning together. Don't be afraid, ask questions, embrace the change. And I hope you learn some more wonderful things in the sessions that are upcoming. Thank you very much. And thank you for my panel.
Thank you very much.
Thank you.
So thank you, Katie, Emmy, Amber, Agata, and Robert for shedding light on this blockchain beyond fintech. I think this was phenomenal. We learned a lot. So thank you for sharing your insights, your thoughts on this. And I'm sure you really inspired a lot of us in this session.